Bitcoin is making headlines, and it's all tied to the US government's ballooning debt. The national debt has soared past $37 trillion, raising alarms about the dollar's long-term stability. Financial leaders like Coinbase's Brian Armstrong and BlackRock's Larry Fink warn that unchecked spending could push people away from the dollar. This fear is fueling de-dollarization, a global search for safer stores of value. Enter Bitcoin, a digital asset with a fixed supply of 21 million coins, immune to government printing. Unlike the dollar, Bitcoin's scarcity makes it attractive as a hedge against inflation and fiscal mismanagement. People are treating Bitcoin like digital gold, a safe haven in uncertain times. As trust in traditional currencies erodes, Bitcoin's appeal as a long-term store of value grows. Major investors and even countries are moving wealth into Bitcoin, seeking security outside the US financial system. The shift isn't just speculation, it's a response to real economic risks. Bitcoin's independence from central banks is now seen as a strength, not a liability. In a world of rising debt and uncertainty, Bitcoin is emerging as a serious contender for the future of money. It's not just individuals. Major institutions are piling into Bitcoin. Corporations, hedge funds, and even government-owned funds are quietly amassing huge Bitcoin reserves. These whales now control up to 95% of all available Bitcoin, signaling a seismic shift in ownership. Companies are adding Bitcoin to their balance sheets, hedging against the dollar's decline. Unlike retail investors, institutions are playing the long game, steadily accumulating and holding. Their buying pressure is driving up demand and price, while protecting against inflation. This institutional rush is a clear bet against traditional finance and government debt. By diversifying into Bitcoin, they're building a firewall for their capital. When the world's biggest players move billions into one asset, it's a powerful endorsement of Bitcoin's future. BlackRock's launch of the iShares Bitcoin Trust ETF has been a game-changer. As the world's largest asset manager, BlackRock's move into Bitcoin drew massive attention. The ETF quickly became the fastest-growing in history, amassing over $72 billion in assets. This product makes Bitcoin accessible to everyday investors and institutions alike. BlackRock's involvement legitimizes Bitcoin in mainstream finance, breaking down old barriers. The ETF's success signals huge pent-up demand and accelerates Bitcoin's integration into traditional portfolios. Bitcoin is no longer niche, it's now a core asset on Wall Street. The financial landscape is shifting, with Bitcoin taking center stage. The US recently lost its perfect credit rating from all major agencies, a historic first. This downgrade reflects soaring deficits and a lack of fiscal discipline. It's a warning sign. The world's trust in US financial management is eroding. A lower rating means higher borrowing costs and more debt, creating a dangerous cycle. For regular people, this can mean higher interest rates on loans and mortgages. More importantly, it shakes confidence in the dollar and US government bonds. Investors are now seeking alternatives, and Bitcoin is at the top of the list. The downgrade validates concerns about government debt and boosts Bitcoin's appeal as a hedge. As faith in traditional assets wanes, decentralized options like Bitcoin gain traction. The credit downgrade isn't just news, it's a catalyst for a new era in finance. People are rethinking what safe really means. While Bitcoin surges, Ethereum faces internal struggles. The Ethereum Foundation is restructuring after criticism over slow progress and possible funding issues. Users are frustrated by delays and a lack of focus on essential upgrades. Meanwhile, skepticism is rising about official US economic data. Many believe inflation and job numbers don't reflect reality. Essential costs like rent and insurance are soaring, but official stats understate the pain. Some companies inflate job postings, making the job market look stronger than it is. This disconnect drives people to seek alternatives they trust, like crypto. As faith in traditional systems fades, the search for transparency and reliability grows. Thanks for watching. Like and subscribe for more videos and updates.